Hi, this is Mark with your Forex update for the week commencing 8th of November 2009. Now, we had NFP Friday, followed by G20 meetings at the weekend. NFP Friday suggested that it was bad news for the dollar, with unemployment figures worse for 26 years. However, price initially went up on the dollar and then down and then sideways. I hope and suspect that this news should now give a better trend for us going up to Christmas. Now, in the last few weeks, my members and I have had some really good trades on the Euro GBP, and it is a pair that I recommend to people new to Forex. The daily range movement is not so great, and it is usually reasonably predictable. And all we were doing in the last few weeks was taking pullbacks up to the 90 area. We got in, well, I personally got in here altogether 10 trades times 3, 30 odd lots, and I only had 3 lost out of the 30. Now, on Friday, price came down here to the area of 89 and bounced away again. And what we're looking at now, I think this area, on all charts timeframes now, you look at the stochastics, you look at the EMAs, everything is now pointing down on this pair. And here, this is where we were getting the bounces last week. On the daily chart, price was coming back up and hitting this 55 EMA, as I say, in the 90 area. It did it again on Friday, NFP Friday, and back down again. These EMAs are now rolling over. We are riding the 5 down here on the daily chart. On the weekly, we have a bearish pin bar candle from last week, which signifies reversal. And again, we had a 5-8 cross, and things are looking down. Now, if you're not in at the moment, there are 2 ways to play this. One is to look for a pullback, and for this we would go onto a daily chart and look for a pullback, and the 50% fib pullback for last week would take you back into the area of 90. So 89.80, 89.90 to 90 area. I don't think it will pull back this far. However, if it does, then I would be all over this again. Back on to the weekly chart, as I said, we had a bearish pin bar, and the thing now is if price continues to go down, I would look for a breakout of the 8900 area. There is a 21 EMA here on the weekly, and there is even an EMA on the monthly chart. So for me, a breakout of 89, then a pullback, and then look for a short. Now, on to other pairs. The Euro last week bounced around. We came down and had a brilliant entry earlier in the week down here that I had pointed out to my followers. We were looking for a pullback to 46.30, and the reason was it was the bottom trend line and the 55 EMA. This worked brilliantly for a 250 odd pip gain. The problem at the moment now with the euro is kind of halfway between the bottom trend line and the upper trend line, and so the point now for us is to try to find an entry for where we could get in. You would suspect that price should simply race away because of the American news. However, this being Forex, that may well not be the case. Again, possible pullbacks. I have fibbed last week's candle, and a possible 50% pullback would bring us to 47.70 and 61.8 to 47.36. So, anywhere down in this area, 47.60 coincidentally is the 4-hour 200 EMA. And again, if you look here on a 4-hour chart, you can see how important this EMA is. So again, if we can get down here, then we have a good opportunity for a long. The Aussie dollar, you will notice, if I flick quickly from one to the other, this is the Euro USD, this is the Aussie dollar, almost an identical chart. These 2 pairs are correlated, and they do move at the current time, 70-odd% of the time, they move in the same direction at the same time. So a similar scenario here for the Aussie dollar, really. If price just races away, then we're a bit stuck and a bit limited, because the potential upside is only 100 pips to a recent high. So for me, again, I would look for a pullback, possibly to 90.50, and even down as far as 90, although I doubt that we will get there. Swissy is correlated in the opposite direction to the euro, and at the moment, the correlation is minus 94%. In that, when the euro is going up, 94% of the time, the Swissy is going down. Last week we had a problem with this pair because price had broken up through and closed above a daily trend line. And what we were waiting for was for price to come back down within this trend line, and we are now back in here. Friday's candle, as you can see, is a huge indecision day, So again, we are looking for potential pullbacks. The theory being now that if the euro is going to shoot up, that the Swissy will come down at least to this recent low in the area of 1 for 1. Not quite 1 for 1. If you do get into this trade, don't put your target as being 1000 because price tends to not quite make it. So I usually add the spread plus 5, and therefore I will be looking at 1.0010 for something like this. Now, here, again, best way really to play it would be to fib the daily or even the weekly candle from last week. The weekly would take you too far above the trend line. For me, a pullback to the trend line would be great. Other than that, I might even leave this for a few days just to wait and see what happens. Now the pound is teasing us at the moment. Last week when price was down here, I said to my followers I would look to short at 6600. And I had a very good short out. This doesn't look like it here on the daily, but if we have a quick look on the 4-hour chart, you can see price came up, hit the 6600, and it gave us 100 and odd pips move back down again. Now, the problem now is price has been bouncing between this trend line and psychological level for the last few weeks. We now came up again to 6600. The teasing thing about this is price closed at 6607, so it closed above the trend line. I'm going to leave it on Monday. The difficulty here is really, is it playing with us and going to fall back down again, or theory being that it's closed and broken above this trend line, and the psychological area is that suggests that it's now going to go up. So again, for me, the only way I really would look at this would be to fib this on the daily candle perhaps. The weekly would be too big. The weekly would bring us back down here. But fib this daily candle and see what that would give us for potential entries. So if we look at 50% here, 50%, 165.75 kind of area. Whether it will do that or not, I do not know. CAD, I'm leaving the CAD for now. The CAD, the Canadian Bank of Canada, threatened to intervene last week, which means that this price, it's in the interest of the Canadian government that the price of the dollar will go up against the CAD. When the CAD is particularly strong, it causes them problems with inflation and unemployment, and their unemployment figures on Friday were much worse than expected. So there is a strong possibility that the Canadian government are going to intervene with this, which would then send the CAD pair back up, and it does look very bullish. We now almost have a 5/8 cross here on a daily. On a weekly, we've already had a 5/8 cross. The stochastics are pointing up. It does suggest that this pair is going to go back up. The problem is at the moment that price has bounced between this area at 1.59 and has bounced up here at 186. I would personally wait for price to break 900 and close above before I would be thinking about this pair again. Pound yen, hardly ever trade it, too volatile, too big a spread for me, but it is at a very interesting area of a triangle on a daily. And the theory of the triangle breakout, as you know, is the size of the triangle, which is at 1500 pips here, would be the size of the breakout in either direction. So we could either be going 1500 up or back down here again, is the theory. EuroCAD last week, this was the weekend candle, the Friday, and I said the problem is it looked bullish, but this upper trend line could kill it, and therefore I wouldn't get involved, and lo and behold, the upper trend line killed it, came back down, touched the bottom one. Again, we're coming up to a triangle. This closed below the trend line. It did pierce it, but it closed below it, and it is a psychological level as well. Again, for me, difficult week last week. I think this week should become clearer as we go along. Maybe not Monday, but certainly later in the week. Hopefully we will see some trends reassert themselves. And the yen, the dollar yen, may be the start of another downtrend here, and price significantly closed below 90 on Friday night, and that has been a huge psychological area of support and resistance. If we are in a new trend line and we can get an entry on Monday, then we have a possible 190 pip down move down to the bottom of the trend, certainly to the bottom of the channel, certainly to a recent low of 89 pips. This, I suspect, may give us the best trade of the week. Have a great week. I'll catch you later.